welcome everyone to webinar 4 of our new series titled Ask Me Anything. We host these every third Thursday at 3 p.m. However, we'll be taking a break for summer. I know, boo. And we'll continue again in September. So in today's series, we welcome our HRlogics tax credits and incentives subject matter experts into the room where there's no scripts, no presentations, just honest conversations. I'm coming to you live from SHRM 2026 in Orlando, so please excuse any background noise. I'll try to mute myself when I'm not speaking and then try to fiddle with my buttons to come off mute again or onto mine. So that should be enough entertainment for today as well. For those who are new or unfamiliar with HRlogics, we simplify time-sensitive tasks that drain HR and payroll teams, like managing unemployment claims, completing I-9s, handling employment and wage verifications, and securing tax credits. We bring the tools, the expertise, and strategic insight to save companies time, reduce risk, and uncover real savings, often in places they didn't even know to look. With our powerful tech and industry-leading experts, we don't just manage compliance, we monetize it. So let's take a minute to review a few housekeeping rules. You're all muted. However, if you look at your Zoom bar, you should see a Q&A button. I'm going to let our brilliant leaders introduce themselves in a minute and kick off a few questions that we received in advance. But don't wait to put your questions in the chat. The sooner you input them, the better chances they will be asked on the call today. All webinars are hosted in the HRlogics news and resource section on our website. You can scan the QR code on the current slide that will take you directly there. Additionally, you will find educational blog posts on hrlogics.com/blog. But I do love a good QR code for minimal typing. So you can scan the QR code right to the right to bring you directly into the recent articles posted. Make sure you also follow HRlogics on LinkedIn so you'll be in the know as soon as a new article is posted or about future events just like this one. So without further ado, I'll start the introductions. I am Elizabeth, also known as Biz. I'm the CRO of HRlogics and the host of the series. I have 15 years of experience in the applicant tracking and onboarding space, and I'm the co-founder of Rise Credits that was acquired by HRlogics in June of 2025. If you'd like to connect, scan the QR code on your screen and save my contact information as well as connect on LinkedIn. Next up, we have Lee, our president of Tax Credits and Incentives and co-founder of Rise. Lee, tell us about your history, why you're passionate about tax credits, and what we should know about you.
Thanks, Biz. Been in the industry about 20 years now, various stops along the way. Before Biz and I founded Rise Tax Credits and Incentives, and here we are with the merger, and now we're HRlogics, and love working with clients, big, small, new, old. Every day is a new day. Every client's a unique client. So we love solving problems, telling people what we see in the industry, and helping people maximize benefits they were unaware of. So that's what I really like every day. It's a new challenge every day, and helping people along the way to keep money in their pocket and not pay the government. So that's my big thrill in life.
Heck yeah, and make sure you connect with Lee. You can scan the QR code there to connect directly with him on LinkedIn. And last but not least, we have Campbell James. Campbell, likewise, tell us about your work history, why you're passionate about WOTC, and what we should know about you.
Yeah, thanks, Biz. Hey, everybody. I am Campbell James. I'm the Senior Director of WOTC here at HRlogics. I've been in WOTC for a total of 5 years across the board, from implementation to client success, operations, all the things. And I'm passionate about the WOTC program because, like a previous boss once told me, it's one of the few programs that benefits everybody involved. Employers receive valuable tax credits, employees gain access to job opportunities, and communities benefit from increased workforce participation. So that's my why. That's why I do it.
I love it. Well, connect with Campbell as well. Our QR code is right there. That will bring you directly into her LinkedIn, so you can press connect there. All right, without further ado, I'm going to stop sharing my screen because I told you we won't actually share screens this time. So let me go ahead and just stop share, and we'll get directly into your questions. All right, so first ones. Now, again, just a reminder for everybody on the call, there is that chat button, so make sure you input your questions there, and the sooner you ask them, the more likely they will all be answered. But we do have about 15 questions that were, again, asked in advance. So, Campbell, let's go you first. Will WOTC come back? If so, when? And should I still be screening? It's an extra step in our hiring process that I would love to eliminate.
Yeah, I think that's the number one question everybody has. There is currently bipartisan legislation pending that would renew and extend the WOTC program and potentially enhance the credit. So add on to certain target groups, expanding eligibility for employees. We've seen this lapse in the past, and Congress has renewed it retroactively then. So we are hopeful that the WOTC program will be attached to a larger bill and be reinstated by the end of the year at the latest, hopefully sooner. Fingers crossed. But yes, you should continue your normal screening process during the hiatus so that you don't miss any credit potential. Everything's still operating normally on our end. We're still submitting within the 28 days, so don't miss a screening.
There you go. Funnel in with that mute button again. So it's a great point there, right? So if you don't screen, you're guaranteed to miss it. But as Campbell said, it's been retroactive in the past every time it's ever been in hiatus previously. So don't stop screening now. As again, it's one way you can guarantee you won't see a credit, is if you don't do anything. So what does our WOTC program look like during the hiatus? So you kind of mentioned this a
Yeah,
little bit, but let's talk further in detail about
yeah,
it.
it looks normal. From a WOTC program standpoint, we're still submitting. Everything has to be done within 28 days of that start date. So we're still taking applications, submitting them within those to ensure timeliness. The states are holding those records, which is something new. In the past, when the program has gone into hiatus, we've kind of accepted applications, not submitted them. It's been a mess when it has been renewed, but this time we're still actively submitting. They're holding those records, and upon renewal, they will work them. So you may see a decrease in credits right now, but upon renewal, you should see a very drastic increase at that time.
That's great. Yeah, I think what Kansas still digging out 2 years behind in
Um,
certifications right now.
Yeah,
So
some states will always fall behind.
all right, so let's bring the next one to you, Lee. So I have locations in Georgia and Florida. Are there state tax credits that I should look into?
Definitely. So Georgia's one of the strongest state job tax credits programs in the country. Other credits you can look at in Georgia can be stacked together or separate with a job tax credit. You have a retraining opportunity for training your workforce in new technology, software, process. You can also take a Georgia R&D credit for a research and development that you have going on in the state. There's also an investment tax credit. So if you're investing improvements in the buildings, investing in new software, technology, that can be a capture as well. Also, there's a unique port tax credit. So if you've have overseas materials or things that you ship overseas come through the port of Savannah, based on tonnage and how much you ship every year, there's an additional port tax credit you can take along with that. So Georgia's tax credits up pretty well together. You just have to know what cards to play or what credits stack together and which are eligible. Some of those can lead to a payroll withholding event or top line benefit, as we call cash, and everybody loves cash. So it's up to kind of sit down with you, review what you have going on in Georgia as far as growing, hiring, investments, and see what best works best with the client and what their appetite is for those different venues of tax credits. So Georgia's always wonderful for that. Florida doesn't have a broad-based tax credit equivalent to Georgia, but they have targeted programs that exist depending on location, industry, and entity structure. So you have QTI, you have an urban tax credit, you have a rural jobs tax credit, and the R&D tax credit. I would say if you are heavily headquartered in the Southeast and you have a multi-state presence, it means, stack opportunity, Georgia, federal, WOTC can be pretty substantial if we look at all those credits that Campbell had mentioned on the WOTC front. Florida does add another layer for qualifications for those as well. So a little different than Georgia, but still some good opportunities in play. And one of those credits not many people venture into because they know Florida doesn't have state tax credits, but they do have opportunities for certain zones and industries that fall within their guidelines. So it's always wise to take a look at that.
Florida had an R&D one too, and this wasn't asked on here, but just I think it's important for people to know too, and maybe you can better explain this as well. But if there's a state R&D, and they
Yes.
also want to do the federal R&D, can they do both?
They can. So, federal credits stay on the federal side of the house. State credits are where you file your tax returns inside the state. So you can run concurrent programs at the same time. They don't take away from each other. Like I said, one is federal, state is state. So you can always stack credits together. If you do, and I think we talked about this in one of our previous podcasts or shows or whatever we're doing here, or highlight videos for HRlogics, that some federal credits do overlap with wages based on which people you put into those programs. So if you have federal empowerment zones or a WOTC program, you can still allocate those towards the people, look at the wages and take both credits, but you can't claim same wages for same credits. So or double dip. But you can always go in and allocate wages based on what credit that is. But you can take state and federal together.
Got it. Well, you're getting ahead. You're answering some of the questions that we had on here already, but I like repetition and repeating. I think people understand it more when we go back to it. So, um, let's see, does my CPA take care of FICA or should I come to someone like you?
You want me to take that one? Okay.
Yeah, yeah.
So I always say, your CPA handles compliance and filing. They claim what you bring to them on the back end, right? So credit specialists is what we are. We run front-end operational programs, screenings, submissions. If your screening and your workflow isn't in place, your CPA doesn't have anything to do. So if they're not taking self-identifying these credits on your behalf, well, we like to say with CPAs, I like to call it the relationship is additive, not competitive. Credit specialists and CPAs serve different functions in the same value chain. Specialists like us usually work on a contingency fee tied to the credits actually realized. So the economic question for clients out there isn't cost, it's just really whether credits are being left uncaptured or you don't know about them. So we always try to work in coordination with the CPAs, more of an extension of their practice. We're not here to replace them or take their jobs, but just to help them focus on their things that run their business on a daily purpose and make their income. And then we help kind of like an accessory or a sidecar, just bring extra benefit to their clients and partner together on a timely basis.
Yep, you bring up a really good point. One of the questions on here too, and why would I come to you if I have a CPA? And I would say one of the biggest things that I've heard when I went to a CPA conference last year in August, actually the one in Denver there,
Yeah.
that Lee popped into too, but sitting with a few CPAs at dinner and talking about what we do at Rise and why it was created, and we're like, that's amazing. I had this customer of mine that asked me about a specific tax credit, actually happened to be in Florida, asked me about a tax credit, and it took me 11 hours to research that one tax credit, and I still don't know what the qualifications are. So I think that's one of the good things where we can step in with CPAs and help them understand what the credits are, what the qualifications are, do all of that monitoring on their behalf, and then give them all the supporting documentation. So all that you have to do is actually complete the form. We're not a tax preparer, so we still need the CPA, the tax accountant, to actually complete the information. We'll just make their lives a whole lot easier with just being able to say, this is what goes in box 1, 2, 3, and 4, and then signing off on it. So like Lee mentioned, we work in conjunction with a lot of CPAs just to help expedite the process. But sometimes, people do stay away from tax credits because it takes a lot of research. So it's always a good thing for you to double check that you're getting everything possible. And that's what Rise by HRlogics does, is give you a free tax credit analysis so that you can really make sure that you're taking advantage of every opportunity.
I'll add on real
Um,
quick with
yeah.
Biz saying that also, you missed the research part. You talked about the time and effort it takes to research.
Mhm.
State tax credits are often sunsetted or legislated out every year, so a lot of nuances when the credits change place every year. So also a lot of stress on CPA firms that they have to have someone full-time doing research on the new legislation. Is old sunsetting? Is retroactivity gone? And is that credit even around anymore for their clients to take benefit of? So that was a good
Yeah.
point.
Yeah, absolutely. I mean, that's why we have an entire team that does that research, so on their behalf. So I always like to make everyone's lives a little bit easier, even if it means a little bit more work on ours. We had mentioned this already, but I want to just reiterate it. So we have two questions that are somewhat similar. So can I take state tax credits on top of federal credits, and then how about federal on top of federal? So just
Yeah, I'll
clarifying both
go
of
into a
those.
little more detail on that. So yes, state and federal credits operate under I would phrase it's complete separate statutory frameworks and are claimed on separate returns. I guess that's a little more level of detail, like the forms and How you file them are totally different. So the anti-double dipping rule only applies within federal programs. You can't use the same wages for two federal credits. State credits have their own wage basis and thresholds independent of WOTC. I guess I should give an example probably, so that would help parse it out a little more. So we'll talk about Georgia's, that's where I'm from, and they have all the credit we talked about earlier. So an example would be if a Georgia Tier 1 hire, one of the counties specifies a Tier 1 county, also qualifies for WOTC, they can still generate 2,400 federal dollars in that program if that's the one they qualify under the screening, and then up to $20,000 in a JTC value over 5 years, right? So $4,000 a year over 5 years will give you that 20. On the same employee, proper documentation, wage allocation, and essentials, is when stacking these, but stacking them in itself is entirely permissible. So state returns, federal returns, separate credits, you can take both. I don't know if that helped or muddy the water, but I think I got through it okay.
Nope, I think that's good. Just can't use same wages for federal and federal, but you could definitely piggyback state on top of federal.
Correct.
And we do have a way, it's kind of unique to us. I haven't seen this with anybody else, but we do have a way to piggyback state credits on top of federal credits, on top of the WOTC survey. So if someone is answering, let's say, yes to a federal TANF question on the WOTC survey, they live in Texas, we may serve up an additional question that's just shown to those people. So it's not elongating the entire survey for every single person, but just if then scenarios within the documentation or within the survey. Similarly for youth credits, if they're in New York or in Louisiana, they answer yes to being in New York and birth dates between 16 and 23 or 16 and 24 will serve as an additional question for them. So basically one survey giving you an opportunity for multiple credits across the board. So with that said, Campbell, this one's going to come to you. How do I maximize my credit opportunities for WOTC?
Yeah. Your main focus here is going to be retention. You want to keep your employees as long as possible to get the most credit potential, because once an employee reaches the 400-hour mark, that's when they're going to hit their max credits. So it's a partial credit up until then. So you're trying to keep them as long as you can, making sure that you're putting them on the schedule, making sure that they're getting to the 400 within their first year of employment. Of course, having a dedicated person in-house is going to help if they're monitoring your WOTC program, but we typically like to take a hands-off approach. We handle that for you. You'll get a compliance report monthly, and if you have questions on that, we'll schedule calls monthly, quarterly, whatever works for you. But your main goal is to check the eligibility of the employees once they've completed the screening and making sure they're getting those 400 hours.
Mm. And something else unique about the system that I haven't seen in anybody else's is that number of hours needed to work to actually get to a partial credit. I have not seen that yet, and that report can actually be sent out on whatever cadence. Generally, everyone asks for it a day before they're doing the schedule. Now, don't want to put anybody into overtime, but if Joe Smith has 8 hours left in order to get at least a partial credit for disabled veteran, might be worthwhile to schedule them for at least 8 additional hours that week so that you can be sure to maximize that. Nothing breaks my heart more than the report we got from Kelly this morning that one of our clients had 2 disabled veterans on their list. Unfortunately, they only worked for 3 to 4 paychecks and did not get to at least 120 hours. So we can try to be that consultant with you to not keep people around if they're not doing a good job, or behavior issues. Definitely don't keep anybody around for those. But if they are to get a credit for you, it might be worth sticking around just a little bit longer. Let's see here. How much time and attention is needed on the client's end for the WOTC program?
Yeah, I think I kind of went into that a little bit on the last question. I jumped the gun a little bit. I think it just varies across the board. It depends on, your comfortability with your employees taking the screening, ensuring that, we have a confirmation code. So ensuring that you are receiving that confirmation code, excuse me, making sure they're not just giving you a fake confirmation code. We've seen that recently. Ours is very specific. So I can tell you when somebody puts in a fake code at the end of their survey, they did not complete it. We are monitoring your program daily to ensure the compliance numbers are where they're supposed to be. So if we see a decrease, we will reach out to you. So like I said, it kind of varies across the board. It's whatever you want to put into it. There are times where we may reach out to you for supporting documentation for an employee that falls under a veteran category. We need a DD 214 or whatever the case may be. We will reach out. We're going to ensure that we're doing everything we can on our end to make your program successful. It's up to you to do the rest.
Then do your 1099 employees qualify for WOTC?
Yeah, that's a simple one. No. 1099 employees do not qualify for WOTC. Only W-2 employees are eligible for the program due to them being subject to employer payroll tax withholdings. Yeah, we ran into that recently. So 1099 employees do not qualify for the program. They can complete the screening if they'd like, but they're not eligible.
Hmm. And I know this question was just specific to WOTC, but a lot of people don't know about all the other tax credits that we can do. So I'll just ask you, Lee, what about for all those other tax credits that we do? Are 1099 employees eligible? Can't
I
get off
mean,
mute.
they come
We can't
off
like
of
us mute
mute,
there,
right?
yeah.
So basically, if you own the employee, you own the tax credit. Is how that works. So maybe we always try to follow the trail though. So if you're a staffing company, you're leasing employees as 1099, maybe go ask the questions like, well, who's your staffing company, right? And they own the employees and they're leasing them out. And if they're W-2, then maybe. But majority of the time, anybody 1099 is not having the appropriate taxes paid by that employer. So you own the employee, you own the benefit is a good rule of thumb.
I'll say this too. It's not on here. People didn't ask it, but people usually say who doesn't qualify for a tax credit, and there's three categories generally. So 1099, we both
Yep.
already answered that one. Government entities. So we do a lot of business under unemployment and employment and wage and I-9 products for government entities, but unfortunately tax credits do not apply to them either. And then nonprofits. And I left them for last because there is a but on there. So if someone is hiring veterans, then they could get an incentive on WOTC for nonprofits, but it's more rare. So we usually just say nonprofits as a whole. And if either of you would want to elaborate, if I missed any other tax credit that could potentially be applicable to nonprofits, please let me know, or please jump in.
Not that I'm aware of, no.
Yeah. I didn't think there was either, but so those are usually the three. So nonprofit, government entity, and then 1099. So all right, so we are growing. We are in a growing organization with plans to double our footprints. Lee, this one should definitely go to you because I've heard you talk a lot about negotiated credits, but what should we know prior to choosing a location?
Um, the thing I see most is depends on how big your organization is and what your goals are for your location. If you're picking dirt and putting a whole manufacturing facility there, if you come from overseas, or you're just expanding a footprint where you already have nexus, right? So there's a couple caveats to all those. I always say that if you have a real estate team, make sure they don't leak anything out. Put a news release out or any press or let anybody know that, hey, we bought land and we're going to build here. And that lets everybody know that you're coming, and that really gives away your leverage, if you will, for negotiating what you may need with the economic development arm of that state. So if you come over here and say, hey, I bought X pharmaceutical company is coming here and they just bought land. We're excited about it. Well, that's usually, upfront decision. I would always say to whoever's doing the land purchasing, not to sign anything, don't sign a lease, don't do anything until you've looked at all the areas you may want to look at, right? A lot of times, different states have different programs and different, let's say, incentives that may be more lucrative than others, may benefit your company more. You look at, what do you need from easements? Is it logistics? Do we need driveways? Do we need electricity? Do we need water for our manufacturing facility? And what are the thresholds and can't think of the word. What are the things you have to hurdle over? Toll gates. Thank you. There we go. Too much soccer on the brain. I got World Cup going on. But you're like, it's like, what do I have to do to qualify to achieve the benefits, right? A lot of states have some good programs, some are more lucrative than others, some give more money. And then some have better, younger talent at a cheaper cost, right? So am I going to build on the West Coast where it's at a premium, or am I going to come down to the Southeast where I have lots of universities and hire directly and work with technical institutions or universities and colleges and get a younger workforce already educated? Also plays a role if you are going to have, this goes back to the port tax credit. So if you're importing goods or materials for your product or services, you need to be on a coast that has a port as well. And, does that come into play as well? So you kind of look at the big picture first, pick some land or a few areas where you think the company could do well, proximity to airport. And then you put some packages together on what your spend is, what your average wages will be, what your needs are, and present that to maybe a couple of different states to see what's best for the organization. But that's kind of long-winded, but don't sign anything until you're sure you want to go to that destination within that state because you've lost your leverage and they know you're coming, so they'll give you less.
Good to know. We've definitely had some organizations here at SHRM that have mentioned growing, and I'm like,
Yeah.
do not announce anything. Just
Yes.
don't
Yeah.
break ground either. Do not put that shovel in the dirt. Like,
A lot of companies are coming over because of tariffs too, right? With, they're giving them back, they're doing this. So people say, we'll just put production here sometimes and not have to worry about paying extra for exporting our services and goods overseas.
yep. Right. So let's see here. I think I have a location in a federal empowerment zone. Does it matter that I'm not hiring?
Is that a me again?
That's a you. Yep, that's a you. I
That's a
mean,
me
I'm
again?
I'm
Yeah.
playing host, and I'll just tag on a little bit if I need
Yeah,
to.
for the empowerment zone credit, it's 20% credit up to $15,000 in wages. So government always makes you do math on their credits. 20% of 15,000 is 3,000, right? They can't ever say it's 3,000 max. It has to be math behind it to make you pause and think a little bit sometimes. Both the EZ and WOTC are, right now currently on hiatus, right? Hopefully they'll be renewed together with, I know Campbell mentioned that earlier. Um, Operating and not adding headcount is really not going to produce you a lot of credit, right? So if you're staying static, actively hiring in those zones, if you have a location, is going to produce you more of a benefit if you're not hiring in the federal empowerment zones. So if hiring plans are imminent, the zone is valuable, confirm the status, document it, and when it renews, you can capture all that growth. Right now, we are going back 3 years for open taxpayers who haven't filed to claim retroactivity. So you can bring those forward for 3 years right now from your last signed or tax return. So 4 years would be September, October for those who haven't filed yet. Let's look at it. If you think you're in a federal empowerment zone, give us a call. Make that happen for you. But it's always going to be hiring in those zones, right? So one of the key things is they have to live and work in the zone. It takes a little bit of digging. It's not the whole city or municipality that's listed. It's drawn block by block when the mapping tool that we've created. So we can always look that address up for you geographically, tell you if you sit in that zone, and then it's a simple payroll run to look at the employee's home address and see if they fit in that zone, and then we can generate a credit and get that over to you. So several layers to it, but if you're in a zone, I would keep hiring within that zone.
I always never understood that. I always use one of the zones in Georgia as an example when I just show people because they're like, but wait, we're in that zip code. I'm like, it's not zip code, it's census tract.
Yes.
And we actually had to do an integration with HUD and pull in census tracts into the mapping tool so that we could easily see. But I always poke fun because on one side of the street, right next to the highway, I think it's Walmart and Chick-fil-A are in zone, but directly across the street is a Zaxby's that's not in zone. I'm like, oh, I feel bad for Zaxby's. They don't qualify for it. But
Yeah.
it's
Chicken solutions.
just luck of the draw of just being
Yeah.
literally across the street. So But yeah, Lee's right. Just have to live and work in zone, and we have a simple payroll file to capture that information over and be able to tell generally within seconds as to whether or not that person qualifies, and then we'll do the math on our side too. So alleviating any of the stress and headaches for you all to do the math, we'll do all of that for you with our calculator tools. So let's see here. Let's skip down a bit. I'm a consultant, and actually, I heard this one at SHRM today too. So, I'm a consultant. Is there an industry that is best for tax credits? And I'll
Hmm.
I'll say what I said today, and then we
Yeah.
chime in further as well. But I love manufacturing. I love manufacturing for everything that we do. I love blue collar because they're generally hiring, they're creating jobs. But manufacturing is a good fit for everything that we do at HRlogics, and they usually also qualify for multiple different things as well in regard to tax credits. So not only WOTC and federal empowerment zones that we've talked a lot about today, R&D because they're improving or creating a new process, and every one of those single projects that they do or products that they create can qualify for an additional credit. There's energy credits if they put any solar on the top of their big footprint buildings. Lots and lots more there. But Lee, what else is good for a manufacturer as well? And then what other industries would you also say?
Yeah, I'd say manufacturing's we call it the golden goose. It kind of covers all the buckets of incentives, right? So you usually have investment, which can, also R&D if you're developing new products as a manufacturer. As you develop those products, a lot of them have quality initiative programs like Six Sigma, Kaizen, ISOs. That takes a lot of training. So there, well, then you have to train your employees on those new initiatives, right? So you get a training credit out of that. If you're expanding and putting new products, maybe you have to hire. So maybe a jobs tax credit is attached to that or a hiring incentive. So I think in, research and development for the product that you're putting in the manufacturing area. So it can spawn off multiple credits. So manufacturing has a little bit of everything in there. So I think they're the strongest bid. When we're looking at opportunities, manufacturing always rises to the top because 1 out of 5 is 20%. Usually with the, WOTC or QSR, you're limited on employee demographics, not employer classification, right? You're just looking at turnover and whether they qualify or not. So I think that's kind of my take on it. But manufacturing is always a good one.
Yeah, they generally offer health coverage too. So if they're in Texas, Santa, they just have to offer health coverage and kind of respond to what those are. Youth, probably not a big one, but yeah, trading, bottom 40, federal empowerment zones, all that good stuff. But yeah, we do support several different industries. Manufacturing just generally rises to the top because of the employee count and the amount that they hire, the ability to do multiple different credits over at once. But I-9's unemployment and verification is also big in that industry as well. But we do support any blue collar industry, like you mentioned food and beverage, hospitality, hotels, retail, staffing, um, logistics. What else am I missing? I feel like there's another one that I'm
You got
missing that's big in the one.
staffing.
Yep, and staffing in there too.
Yeah.
I think what most people don't understand about staffing too is a lot of times, and Lee, you had mentioned this earlier, for staffing, unless they're direct to hire, oftentimes they're getting hired as a W-2 employee for that staffing company. So not only does the staffing company get to receive the credit, but whoever they place them with, because they're transferring employment, also gets the credit. So a different credit, that time starts over. So they could potentially, have a better chance at placing that person full time with that employer that they're doing temp staffing with if that person also comes with a credit. So it's an extra
Right.
incentive for staffing companies to screen for WOTC and, say, hey, look, this person does come with a credit. So better chances there. Campbell, sorry, we've been a little quiet on you. I apologize for not having additional questions your way, but this one does come to you. So my payroll company includes WOTC within the process. Is there a reason I should look outside of them? I love this question, by the
Yeah.
way.
Yeah, absolutely. I think it kind of goes back to the question earlier about, CPA doing FICA. Um, While it may seem like the easier option, we often find that you are not maximizing your credit potential by using your payroll company. Payroll is their expertise. That's what they're going to do day in and day out. Our team is solely focusing on your WOTC program. We're monitoring your compliance rates, providing reporting so that you can keep track of your program. And on the back end, we're checking for other tax credit opportunities through the WOTC survey, which I know y'all talked about briefly earlier. These are the things that we're doing day in and day out, and we're striving to provide that expertise. So it might be the easier option. It may not always be the best option. You want to make sure that you're maximizing that credit potential. And that's what we're here for, to work with your payroll provider and get that data from them so that we can work it on your behalf.
I always say too, we're contingent based. We're not going to get paid unless you get paid. And so a payroll
Right.
company, unfortunately, is going to get paid regardless because you're utilizing them for payroll. So they don't have extra incentives to give you more credits. They frankly don't care. They're using it as an add-on just to say they have it in most cases. I won't use a blanket statement. I hate those. But for the most case, every time I've heard somebody doing tax credits through their payroll provider, they generally say, well, we saw a huge dip in credits. What happened? Well, you're not working with a tax expert, first off, and second off, they get paid regardless. So
Yeah, I think that's a great point.
Yeah, I'd like to add, like, specialists like ourselves, we typically achieve materially higher screening rates through dedicated workflows and follow-up. Is one of our things we're always really good at, and Campbell and her team's exceptional. And then the what I call like an edge case, right? So veteran subcategories, long-term employee determinations, XFL and eligibilities require more nuanced handling, and Jira's platforms often miss those, right? So 70% of your WOTC credits are in three categories, and sometimes they may not go above and beyond like we do to help capture those outlier categories that take a little extra work and handling that we like to do with our clients.
yeah, you're right. And if the supporting documentation doesn't come, you may get the answer on the survey. But what about the supporting documentation? And Campbell, you mentioned the DD 214 earlier. Our system will send reports out as well as reminders out to try to get that information on behalf of the employer. So we'll take every effort to do that, taking that off the hands of the employer until, unfortunately, absolutely ran out all of our reminders, and now we have to get in touch with the employer to try to get their assistance. That's generally the only time that we'll get in touch with them to try to get that information, as if we've exhausted every other avenue.
Yeah, I think that's a great point. Also, I've heard, from clients, well, my previous vendor, they did this, and they were reaching out to me every single day trying to capture this information. We are reaching out to the employees, like you said. We're trying to exhaust those options first, sending them reminders to their email, because that is something they have to provide to us in that survey. So, once we've exhausted those options, they're non-responsive to us, which who checks their email anymore? But those are things that we're doing first before we get to you. You are our last resort, but we are relying on you, and that is when we ask that you work with us to get those things.
Yeah, and I know Kelly and our team, if they're Leah mentioned the felon one, that's something that we can look up too. So we will try to look up and Google things first as well, even if we can't get somebody on the line. So
Oh yeah.
um so what do I need to share to know if I qualify for tax credits? And I'll take this one too. I assume this is just about the RISE system that helps navigate and notify you of any additional tax credits that could be applicable to where you have locations. It's basic information. So you should know your company name, location name, and then street address information. And one of the additional fields that we added in is just industry, because there are 3,000 credits across their incentives, loans that could be applicable. However, they may not be applicable to your industry. So just helping to narrow down even further. It's just those 8 fields. So again, company name, location name, street address field. So street name, address, city, state, zip, and then again, industry. And then also number of hires. So a lot of credits are hiring based. So if you're unsure about what that is, and generally we'll take your employee count and usually just do 100% turnover. So a lot of blue collar industries are at least that. Are there credits available in the U.S. territories? So I'm guessing Puerto Rico, Guam, U.S. Virgin Islands. I just said
Yeah,
to
they're
ask
kind of
that in
one
terms of
off.
things.
So those areas usually have, just from my past experience, like the federal disaster credits, right? So think of hurricanes, winds, earthquakes, things like that, fires. We've had some work in my past life working with those credits, but nothing that I know as far as like a general state credit because they're territories, they're not states, still get to vote. But sometimes they do get extended credits for disaster credits. Gosh, have been sunset for a while. They keep happening. Everybody reads them in the papers, hurricanes, windstorms, ice storms, fires.
Floods.
And
Yep.
none of those, have been, brought back to life. So we would love to help people out with those because those cost a lot of money. They cost people a lot of money. They cost business owners a lot of money. And it really helped a lot of people in a bad time because to qualify, they still have to pay those employees. Help subsidize them while they rebuild or get everything turned back on and built back up so they can start serving the community. And a lot of times those employers are stressed with trying to keep employees paid so they don't lose their jobs and everybody's put in a bad situation. So hopefully if someone in legislation is reading this or listening to it, that disaster credits will be helpful to everybody on no matter what side of the aisle you sit on.
Yeah, we thought for sure, right? We had senators and congressmen alike last year telling us that there is going to be disaster credits in the big beautiful bill.
Yeah,
100% going to be there. And they should have been for what California wildfires, Hurricane Helene, um, the Texas freeze, I think was also
Texas
supposed to be in
freeze.
there as
Yeah.
well. And was shocked, utterly shocked that no disaster credits were mentioned at all. And then, of course, with WOTC and federal empowerment zones also not being in there, completely shocked because we've only heard that it was supposed to be not only renewed, but expanded to spouses of veterans too. So, make sure to keep up with legislation. Sometimes we hear those things from lobbyists and congressmen, and unfortunately, sometimes they don't make it in the final bill, but we are hopeful that they actually will this year. And there is a bill that is in legislation. But like I always tell everybody, when you get a new bill that's issued in, there's a lot of asks in there, and our congressmen and women love to fight across the aisle to negotiate what they want and things. So it's not going to be tomorrow. But we'll hear of something probably in the near future, and then hopefully within a couple of months, everything will be renewed. So, anything else that Campbell, you or Lee want to mention on this call while I go back to sharing my screen that you think is important for people to know that maybe they didn't ask on this call today?
I would just say, as a general thing, like look at what you do, right? So are we hiring people? Are we investing? Are we growing? Are we selling a company? That can also be a tax event, right? If it's a stock sale or an asset sale, that could trigger a tax event for you as well. So, just take a high level, check at your business. Are you growing, expanding, selling? Spinning off companies. There's all kinds of things that you do normally on a daily basis that could trigger a tax event in your favor. So just keep in mind, like, oh, I don't know about it. I don't have time to ask. I've never done that before. Just hit the QR code, have a conversation, and we can help guide you. Maybe you don't have anything, maybe you do, but just ask the question. If you don't ask it, it's always going to be no. So,
Certainly right.
Yeah, I
Campbell,
think
what about
Lee
you?
took the words right out of my mouth. I was going to say, you don't know what you don't know. So it never
yeah.
hurts to just reach out. Let us be the professionals that help you and teach you the things that you don't know. That's what we're here for on a daily basis.
Absolutely. I would agree with that. Well, I mentioned at the top of the call that this is the fourth webinar in our Ask Me Anything webinar series that will be occurring monthly every third Thursday at 3 p.m. But we will be coming back in September. We're going to take off the months of July and August just due to a lot of being the travel season for everyone. But we'd love your feedback as to be what subject we should be discussing next. So drop a comment in the chat or please scan the QR code to complete a brief survey. So by doing that, we can ensure that we are bringing topics that are important to you to the forefront. So with that, our webinar will conclude. Thank you, Lee. Thank you, Campbell, for joining us today. And thank you all for joining. Have a great day, everyone.
Take care, everybody. Thank you.
Thanks.